Hey everyone, welcome back to another episode of Talking Success. Kind of following on the theme of all things investment and VCs and funding and exits and all the really exciting stuff. I'm joined today by someone I've known for quite a few years, Mr. Anton Gaylard from Crossfin. For those of you who don't know Crossfin and kind of what their portfolio includes, I'm going to let Anton do a quick intro. You'll probably be quite surprised when he goes through some of the companies in the portfolio. I didn't know that was part of that group. As was I many years ago, and the group has kind of grown, or the portfolio has grown and grown over the years. And Crossfin do some incredible things and made some incredible investments here in South Africa, but also internationally, which I think we'll cover as well. So Anton, great to see you. Thanks so much for joining. I know you had some trouble sort of loading up Google Chrome. That's okay. You can be a tech investor, extraordinaire, but struggle with Google Chrome. I don't know. But anyway, it's great to have you on board. Thanks for joining us this morning. For those who kind of don't know Crossfin, maybe not have come across you, quick intro would be great.
Thanks, Darren. Yeah, I must admit I'm a bit of a MacBook fan. So had Chrome on, but evidently I didn't like the version. From a Crossfin perspective, my partner Dean and I have been working together since 2009. So we've actually evolved from investing behind tech through a business called the UCS Group, which was listed on the JSE. From 2011, we evolved into capital investments, where we took the software assets out of the UCS Group after exiting the rest of the business to Business Connection. We delisted and rebranded capital investments and continued to invest off balance sheet under capital investments, but saw a lot of opportunity in the FinTech assets, which are really what I was primarily responsible for from 2009. So we actually spun those out in 2017 into Crossfin, which is a FinTech-focused investment platform. And we've been investing in FinTech ever since 2017 through Crossfin. In Crossfin, we actually have three investment platforms. The predominant investment thesis and fund is a quasi-growth equity type platform where we invest significant equity stakes alongside founders and entrepreneurs in businesses that we believe are exciting and really poised for growth. We take preferably a controlling stake, at worst a 30% equity stake, and really back and build these businesses to grow and work alongside founders and entrepreneurs and get very involved. So I'd say active investors. Some of the businesses that you'll recognize, we were heavily invested in Y Group, which we exited a couple of years ago to Salt. It's now called Yo-Yo. We were actively invested in Retail Capital, which we exited to Time Bank last year. We are actively invested and have been for the past 10 years in Ikorka, which is really a great business, showing excellent growth at the moment in the Empire space. We're invested in Cybrin, which is really supporting banks with technology throughout Africa, about 100 banks on their books, and we're invested in Adumo, which is a very strong, significant payment acquirer across all tiers of the payments ecosystem and market, from tier 2 all the way down to informal. And those are some of the larger investments. In some of those investments, for instance, also the Akello Group, we have a number of businesses that we've been investing in over the years that we've consolidated. So under Akello, we've consolidated Crossgate with 2Engage, Retail Engage, 2U, and a couple of other exciting businesses, and creating a group of businesses focused on financial inclusion and the displacement of cash in the economy. Whereas in Adumo, we've consolidated investments in innovation, in SureSwipe, in GARP, in SwitchPay, and in Dumo Online and in Dumo Payouts into a significant payment acquiring group, and building that out as a separate sort of asset class, and have similar plans for Cybrin, and really backing the Ikorka team to grow their businesses. That's a predominant platform. But then we also have a Series A platform, which we've structured out of Mauritius, called Crossfin Mauritius. There we like to take obviously smaller stakes because we're not as close to the founders, because we're looking at businesses outside of South Africa. But still fintech, still exciting, still showing huge growth. Recently invested in my PinPad, showing amazing growth in
Yep,
South
saw that.
America of all places, with clients like StoneCo and Mercado Pago and Ubank and others on their books. Invested in Vantage Pay, invested in Retail Capital International, which is an interesting story. Maybe we'll come back to a little bit later because it's the evolution of our investment in retail capital in South Africa, and have some really interesting prospects on the tables from the Crossfin Mauritius perspective, so that we can try and externalize our investments outside of South Africa, because the predominant investments we've made to date have been centered around South African businesses and then helping them grow offshore or into other markets or with new products. And then, I mean, you've known me for a long time. We've always been very interested in very early stage businesses. So we've got Crossfin Ventures, where we back startups. We've got some interesting businesses in there. We've got Moment, we've got True ID, we've got Troy Gold, very recently a business called Ask Gogo, which is quite exciting, and Atura. But what's important is our early stage investments in Y Group and eCorca started at the idea phase. And whilst we backed those businesses for 10 years through their evolution, that's kind of how they were incubated. So it's an important piece, albeit a small piece, of our cap table.
Fantastic. Anton, I know there's some sort of structure with the guys at Apis Partners in London. Where does that sit within the sort of group, and what is that relationship?
So we look to co-invest with relevant external investors in certain specific assets when the need arises or the opportunity arises. And we've always enjoyed working with Apis, Nick and the team there, and have co-invested with them in Retail Capital, which we've now both exited to Time Bank. We also have co-invested with them in Adumo, and we've co-invested with them in eCorca. So whilst they're not invested in the Crossfin structure specifically, they are co-investors of ours in some of our significant assets.
Okay, fantastic. Well, seems to be whatever Apis touch turns to gold, but I guess that's their business model, right? And I can't, I have to say the same for you guys. I mean, eCorca is obviously a household brand, done exceptionally well. Know the guys at Adumo, Paul and the team there, and they built a phenomenal business, very complex business, because as you said, there's lots of sort of different parties and had to sort of transform and bring everything together. And I think that's been a big project in itself. But I also met the guys from Troy Gold a couple of weeks ago, Dane, and sort of listening to their story and listening to what they're creating. It's a very different model to what you would class as kind of core payments or even core fintech. I think if you could spend a minute sort of talking about what they do, because I was a very interesting conversation over a couple of cappuccinos a couple of weeks ago in Pretoria.
Yeah, so I mean, it's a great business, very interesting concept. Dane and Bass are brothers, and they really are gold bugs. They spent a bit of time in the States just around the 2008 crash, working in investment banking and the like, and realized the volatility of the traditional markets. And being gold bugs, came back to South Africa to start a fintech business leveraging gold. And what they're basically building out, I suppose in the long term, you could say it could be a gold-backed bank, but they're not trying to be another bank. They're basically just letting you take your gold assets and use them in a liquid form like a banking product. Through the Troy Gold app, you can upload your gold. They actually deposit the gold and store it. They fractionalize it for you and allow you to basically own fractions of that gold, which you can then buy and or sell, buy more gold or sell gold. So it makes gold an easier asset to hold. But because it's a proper asset, it's a good rand hedge, it's an inflation hedge, it's a foreign currency type hedge. But they also enable you to lend against your gold. So you actually get a physical Troy Gold credit card backed by your gold holdings that you can lend against, spend like a normal credit card, and or just continue to save in gold by just continuing to buy on a monthly basis more gold as you invest. And it basically enables you to leverage your gold, but in a liquid form. So you can actually spend and have it quite malleable. You can also earn interest on the gold that you hold if you're happy to have it as collateral for someone else to borrow against, which is quite unique. So, I mean, their motto is allowing you to live in gold, and you can do that through the Troy app.
It's fascinating. I mean, he was talking through the sort of different business cases, or user cases for it. And I think my initial reaction was, probably it's just for the higher LSM and the sort of the wealthy small percentile. But actually, when Dane started talking about some of actually their consumers or their customers that are using this, is people that are literally putting in 100 rand a month, going, I just want to diversify, not have everything in rand. I actually like the idea of gold. It's recognized. It's not as volatile as cryptocurrencies or even the stock exchange. So, I was really surprised when he went through sort of the demographics of people that are using the platform, because correct me if I'm wrong, Anton, but sort of Akello Group, that's very much focused on sort of financial inclusion and that sort of aspect of fintech, which is obviously vital across Africa. No more so than here in SA. Do you see sort of Troy Gold being also an element of financial inclusion, albeit maybe a slightly different angle? The investments you've got under Akello, do you invest in those a bit like Quana do and say, actually, to come into that category, there needs to be impact focus, or there needs to be a significant positive effect on financial inclusion? How do you work that?
Yeah, so I mean, the Troy investment was a separate investment to the Akello investment. It could be deemed financial inclusion, but I think it's a different value proposition, and it has a huge target market. Whereas from an Akello perspective, the guys really are focusing on solving the challenges in the informal market, and helping displace cash, because carrying cash is a risk and it's expensive. So, through businesses like Efficacy Payments, they've got very novel ways of enabling people to deposit cash at till directly onto a credit card or a debit card, and helping consumers, be able to move money into a digital realm, even if it's through a point of sale environment in a normal retail store, so they don't always have to look out for a bank or an ATM. Right way through to a loyalty program in Bonsella that they're putting into the informal market to enable brands to engage with the different spares and the consumers in the informal market, leveraging the Akello Bonsella platform. And then a host of products and solutions in between that kind of fill that gap. So their focus is driving financial inclusion at the bottom of the pyramid, whereas Troy, as you mentioned, they kind of focus on all tiers, and it's anyone that actually wants to hedge against the rand or the dollar, or just have some safe currency that's actually asset backed.
Yeah. Okay, amazing. I've got a question for you, and it's one that I've grappled with for many years. And this is not prepped, by the way, everyone. So you've got Adumo in the group, you've got Ikoka in the group, and I know there's obviously some relationships there in the past. You've got some other, what I would call relatively similar companies. So Adumo's got Adumo Online. Ikoka, I had a podcast with Matt a couple of weeks ago, and he was talking about sort of the e-com side and accepting payments, card not present. How do you deal with things as an investment group with sort of conflict of interests, or companies actually within the portfolio either not necessarily setting out to do the same thing, but I think what we've seen certainly since COVID is, companies have had to pivot and business models have had to pivot. And whilst you may be, firmly in the POS hardware, actually what happened over COVID is there was a move now to e-com. So businesses like Ikoka have had to transform. Is that difficult to manage from a VC perspective when you have a group of companies, or is it great because you have more opportunities to sell to more customers and grow the value of the businesses?
So no, it's not difficult, because we'll never invest directly in two competitive businesses. We really focus on investing behind complementary businesses and letting the benefit of the ecosystem help de-risk each of those investments. So what you'll find is, whilst at face value it might look like the businesses compete, if you drill down to the detail, you'll find they're either servicing a different tier in the market, or they're servicing a different geography, or the one is hardware focused and the other software focused. So they are generally very complementary, and we back the entrepreneurs. So where the businesses tend to find direction, we will support the entrepreneurs. So what we did originally with the Ikorka investment, for instance, is because we had an investment in innovation and SureSwipe and the like, which were very strong payment acquiring businesses with a lot of domain experience and expertise in the fold. When we acquired the business, we leveraged the payment switch from Adumo to help fast track the Ikorka team to come on board. And funnily enough, we actually also leveraged the app dev team in Y Group to help fast track the build of the app, and then our banking relationships to help bring the business together. Then we nurtured the business over a couple of years, and Matt and his team have done amazing work. I mean, I can't fault them at all. After about 5-6 years, they found the unit economics and the metrics that really worked, and we were able to really double down. And that's when we bought, Apis as co-investors and also the IFC to really help grow that business and fast track it. At a point in time when the business actually found its feet and really looked like it could stand on its own, we identified that actually it can stand out on its own and it should be a separate investment, and focused on that outside of the Adumo world. But Adumo has never really competed at that informal level market, which kind of was the Ikorka space. So we manage things carefully, but the Crossfin portfolio effect is where the true value lies, because everyone can leverage domain knowledge and expertise across the portfolio. And what Dean and myself really do is we spend a lot of time just trying to get the entrepreneurs into relevant rooms and environments that encourage the collaboration and then really help them fast track their businesses.
So, for example, if Ikorka wanted to launch a BNPL product, rather than them having to create it themselves, you would link them up with the guys at SwitchPay and go, listen, solution's kind of built, let's work out the commercial model, let's work out the sort of technical integrations. You can then go to market a hell of a lot quicker than another company coming in and wanting to build the rails from scratch, effectively.
100%. With one caveat, we'll never tell them that they have to do that. We'll just put them in the same room and say, guys, at arm's length, we think you should be able to work out a commercial relationship that works here, and that'll really help you de-risk and fast track your business. And then we leave it to them. If they don't see eye to eye or can't make it work or would prefer to work somewhere else, that's their call. It worked really well for us in our investment with Retail Capital, because through Retail Capital, when we first invested in the business, they were very strong and focused on, salespeople on the ground doing the hard selling of the merchant cash advances. And then once we had invested in Retail Capital, we really helped encourage the teams to work together and integrate the payments businesses with Retail Capital, forming arm's length business relationships, which were win-win for both parties. And that really helped solve a frictionless digital onboarding process for Retail Capital that made the Adumo and Ikorka merchants really happy as well, because they had a sticky solution where not only were they getting payment acquiring, but now they were also getting the opportunity to have access to cash advances that didn't require reams of bank approvals and processes, et cetera. That's been a really good investment. And like I mentioned, the team came to us when they were approached by Time Bank, and Carl really wanted to be part of what could ultimately turn into, the consumer arm of the Time Bank. And so whilst it might have been early days for us in the Retail Capital exit, that's where the team wanted to go, and we supported the process.
And I know Kun and the team there have done a great job in sort of integrating that business. You mentioned when we started though, there's Retail Capital International. What's that? What does that say?
Two things. One, I mentioned we weren't really interested in parting ways with Carl and his team. We really enjoyed the 4 years that we were invested in the business, and we felt we had just started unlocking value. So we wanted to find a way to continue working with them. And then the Time team with Kun, who I really also enjoy working with, they were only interested in Retail Capital for what we had built in South Africa and potentially in the other markets at Time we're going to. So we were able to come together at the time of the transaction and carve out the IP that we could leverage through a new structure, which is Retail Capital International, partnering with other companies with distribution and or access to funding in other territories. So we get to continue the journey with Carl and his team through another vehicle, and Time Bank are also shareholders in that.
Wow. Okay, I didn't know that. That's news to
Early
me.
days. Early days.
Okay, well, like you said, everything starts. Well, certainly a number of your investments started earlier. I'd like to talk about that as well, because I think that's really important to a lot of our listeners, people that tune in, are at various different stages of evolution when it comes to fintech. Some are sort of ideation stage, some are building sort of MVPs, some have got some initial traction and are now looking at sort of seed funding. Others are more advanced, looking at Series A, etc. You mentioned something very important, which was you invest in people, you invest in the entrepreneurs. I would imagine, because I know I've sent quite a few your way in the last X amount of years, you get you get contacted by a lot of people that say, hey, listen, I've got this great idea. I need some investment. There obviously is a point where you go, hey, that's not for us, or you're too early, or it doesn't fit in with our philosophy as Crossfin. What do you look for in an entrepreneur, and how has that changed over the last couple of years since COVID?
I don't think it's changed since COVID. I think we've
Okay.
always looked for genuine entrepreneurs, potentially with a proven track record, or come with very strong referrals that share our values, our vision and focus. And we're definitely not looking for, the guys that come with high philosophical sales hats and sell you the world, because often there's a lot of smoke and mirrors in there. And we like the guys that come with substance, that are genuine, that you can understand, have really thought about the problem or pain point that they're trying to solve, that you can see have the ability to pull a team along with them through thick and thin, because they have to be tenacious. They have to just keep their heads down and do whatever it takes through a couple of pivots to get things right. They have to have the commercial sense to understand that whatever they're doing has to turn into revenue, and that ultimately needs to turn into profits. So they have to be driven with that kind of mindset, and understand exactly how the product's going to service the customer, the pain point, and what the opportunity in the market is, and must show respect for the way that they're going to use their shareholders' funds. Because so it's very important to understand how they want to deploy the funds and how they plan to deploy it, and at what rate, and over what sort of milestones. And if we get comfort that those boxes are starting to get ticked, then it's important to understand the rest of the team, and or opportunity, and then get down into the detail. Naturally, if they've got some traction and you can see that customers are already paying for the service that they're wanting to get funding behind, and then it's just a question of how big is the market, and does this look exciting enough? It makes the conversation easier, and then we need to be aligned on investment philosophy, term, potential exits, things like that. We get a huge amount of opportunities past our plate. We've got a sort of a little funnel that we quickly gauge to try and sift out the ones that we could be interested in looking at, but we're a small team. So, there's some great businesses that come past us, which we just have to pass on because we don't have the capacity at the time, based on other activity that we're involved in. But there's that element of gut where on face value in that first meeting, you get a feeling that actually this is worth a follow on.
The only reason I asked the question, or I added to the question post-COVID, and maybe that wasn't the right term, maybe post-2023, okay? Because I think it's been a tough year for the majority of business, certainly in fintech. We've seen, obviously, valuations cold. We'll come on to that in a minute. We've seen macroeconomics. We've seen cost of living rising. Entrepreneurs that perhaps hadn't been through a recession or haven't been through these really challenging times, where we've had boom for the last 5, 6, 7 years. Do you look at, when you're investing in individuals or entrepreneurs and businesses, do you look at actually, okay, you've done really well through the good times, but arguably, what have you done when things have been difficult? How have you changed? How have you pivoted? How have you made sometimes some really difficult decisions, whether that be, people related or business focused or regional focused or growth focused. Is that a consideration for you guys in the VC world or
Yeah,
not?
it's if there is experience of that in the past, that's definitely
Yeah,
reviewed and reflected on as part of the process and the DD, etc. If
yeah,
if there isn't, because it's too early stage, I definitely probe for your personal challenges and tragedies in their past and how they've overcome those, and also some scenarios where you put some scenarios in front and say, how would you address this? It's really important to understand that. And that's why I come back to just making sure right up front that the person that you're dealing with is actually respecting the fact that the funding you're going to give them might not even be your own funding. It's your shareholders' funding, and you're responsible for it. And they also need to be responsible for it, because it does need to give a return. It's not a grant.
yeah. No, absolutely. Okay. I mentioned the sort of valuations and the numbers that, or the hit that's had over the last 12, 18 months or so, which we probably don't need to go into. I think everyone's aware of what happened. How is it when, or how do you deal with entrepreneurs that are coming to you and saying, well, I've got this idea, and you say, okay, how much are you looking to raise? And they come up with a number, 10 million bar, for example. And you say, okay, what's that based on? And they give you some sort of, number of, multiple, and you go, hang on a minute, you come back down to earth. From talking to lots of people in the industry, there isn't kind of a, for a payments business that does this, the multiple is going to be Y. For a rewards business that does X, the rate's going to be Z. How do you then sort of manage those conversations with entrepreneurs that may have sort of some crazy ideas, or maybe not even crazy ideas, but they've looked at data from, let's look in the BNPL world of Klarna and what have you, or they've looked at a Stripe, or they've looked at, I don't know, we can name hundreds of them, and we've got these crazy numbers and going, 100x, 200x, whatever it may be. How do you manage those conversations? And then does that have a real world effect, almost like a Dragon's Den or whatever they call it in the States, and you're sitting there going, hang on a minute, your business isn't going to be worth that. There's no way in the world. So we'll invest at this level, but we would want a higher chunk of equity. Do those conversations happen in the real world, or is that just sort of TV stuff?
No. I mean, those conversations happen every day. I suppose we don't let ourselves get distracted by external valuations. We take all the information from the prospective entrepreneur. We do our own models and our own valuation metrics. We do leverage international benchmarks, but then we've got discounts that we will apply based on the economy, the size of our market, etc., etc. We'll come up using about 4 or 5 different valuation metrics, whether it's discounted cash flow or last 12 months or future forecast, whatever it is, cash invested, cash required, etc. And then we'll kind of present back to the team the different valuation models that we've come at, match it to where theirs is, and try find some happy place in the middle. And if we totally off, because often we are way off, because we are conservative value investors, we just have to be big enough to say thanks, but it's not for us. And we've unfortunately had to walk away from quite a few opportunities that I would really have liked to have been invested in, but that's just how it is. What we do is we find other creative ways of doing things where it's just too early stage to really get real valuation metrics around. A very early stage, you can put a little bit of cash in for a certain equity stake and put the balance in on a convertible loan. You can agree a time frame or a liquidity event when the balance converts. Until that stage, it attracts interest in a convertible loan type form. And when it does convert, it can be converting at an agreed discount to whatever the real equity transaction is at that point in time. And or you could take them, you could hold them to their forecast, agree a revenue multiple or an EBITDA multiple against their forecast and say it'll convert in 24 months' time at this multiple based on actuals. So you've given me your forecast. Let's go with it. But we're going to convert into
Yeah.
equity based on actuals in 24 months' time. Until then, it's a convertible note. The other way we've done it is safe notes, because they also convert at a discount to the next liquidity transaction or equity event. And that's when it's priced by other people in the market. So you're getting the benefit of the discount because you're putting your money in early, but it's too soon to actually get a real value on the business. You need to see the rubber hitting the road first.
Yeah, sure. Oh, there's multiple ways. I think there's, you mentioned safe notes and convertible notes and convertible loans and what have you. So lots of different ways for people to look at that. I think before we wrap up, I suppose a bit more of a sort of a generic question. Where do you see gaps in the funding markets? Here across the continent. Obviously, I know we're focusing a lot on South Africa, but generally speaking, is it at sort of angel level? Do you think the banks could do more? Do you think there is alternative lenders that could do more? Do you think that there are some VCs, not necessarily saying you guys, but other VCs that could open up their books and write maybe smaller checks, but a higher number of those checks? Where do you see the market, and what do you see as the opportunities?
I don't know about whether I see the market or not, but there's definitely the earlier stage investment, the less appetite for investment there is, and obviously that's because it's higher risk, potentially higher return, but definitely higher risk, and they're definitely not all going to succeed. So and it takes a lot more time. It's a smaller amount of capital, so you really have to be passionate about the space. And I don't think a bank's got the capacity unless they can just carve out a certain pocket of cash and say that's high risk, potentially high return, and we've got a team that we're prepared to manage that. Because the earlier stage investment, the more time it consumes. There's a lot of mentorship. There's a lot of assistance in structuring and support, moral support, as well as product type support, marketing networks, etc. So it's quite an imbalance. Whereas it's quite easy to see a solid performing business with reliable profitability. It's quite easy to get your head around an investment, make a commitment, and feel quite safe that you're going to get your money back plus upside. So it's definitely the earlier stage, the less access to funding there is. I think the biggest hole at the moment is follow-on funding, because a lot of the earlier stage funds are prepared to put a little bit of seed funding in to see where it's going to go, but they don't have a mandate to follow on, and those businesses are still potentially too early for kind of the next investors. So how we've solved for that is we try and follow between our different platforms, from Crossfin Ventures, through the Mauritian platform and or into the broader platform. But recently we also went to our shareholders in Crossfin Ventures and asked to increase the mandate so that we could provide follow-on funding to businesses we backed initially. And we've just doubled down on both Troy Gold and True ID because of that. I think it's really important. Otherwise, you leave the businesses in the lurch. They've got excitement. They've got momentum. They had some early stage funding. They still haven't found that pivot that really needs to turn on, or they're that close to break even, but the money dries up, and then it's difficult.
Yeah, absolutely. And we've seen a few of that, certainly over the last 4 or 5 months. We've seen a number of companies that haven't been able to sort of raise that follow-on funding, that they've just had to shut doors because there is no funding left, and leaves a void. It's a shame. Anton, listen, thank you for your time. I'm glad you've got Google Chrome now installed on your Mac. I only use Google Chrome for this as well, but to be honest with you, I'm a Mac fan. But if people want to reach out, and I just a message to anyone that is considering reaching out to Anton and the team there, they are extremely busy. They do get lots and lots of inquiries. So if they don't get back to you sort of straight away, please be patient. Don't drive the guys mad. And we're coming up to sort of, well, I was ordering some food the other night, and I said, "Oh, it's only October. It's nearly November." She went, "There's no November in South Africa. It goes October, December." So we are coming up to silly season where everything's going to shut down. But if you do want to look up Anton and Crossfin, I'll put some links in here. Anton's very active on LinkedIn as well. They have a great newsletter that I've been subscribing to for the last couple of months, with loads of really insightful information. So do yourself a favor and subscribe there as well. Next week, I think this is going to come out next week, but I have a certain chap called Mr. Brett King coming on the podcast, who probably needs no introduction if you follow the world of fintech. Australian chap that's been around the world multiple times, and is a rather interesting chat when it comes to commentating. So, Anton, I'll leave it there. Thanks so much. If you've got any last sort of words, feel free. If not, I'll let you get on. It's lunchtime now in Cape Town.
No, thanks, Darren. I've had the privilege of listening to Brett twice, so that'll be a real treat. Enjoy that.
Awesome.
This is an ecosystem, so feel free to reach out. If we can't help, at least we can point you in the right direction. We enjoy what we're doing, and we're here to help. So look forward to catching up.
Thank you so much. I'll see you in Cape Town for a glass of wine soon.